Good morning, everybody, and this is your S&P 500 day trade setups for today. So, as expected, we are in the zone here, and we did bounce a little bit yesterday after the Fed's minutes, but I think that was more of a profit taking from the shorts than anything else. So, we're right back in this area that we struggled in for so long. You can see we were sort of hovering there in April. We tried to break up at the end of April, beginning of May, and then tried to break down. Then we were back in it. Then we broke up. Now we're back in it. So just look at the oscillators. That's giving you a clue as to what's happening. So we're sort of looking for support. And we've got, really have diversions. I suppose we could argue there's diversions from these tails. You can see prices ever so slightly higher, whereas the oscillators are a little bit lower. Well, a lot lower. Anyway, so my opinion right now is we're back in this range, and we should just be careful because you're probably going to range about. Now, we're still waiting for the politicians to figure out what they're going to do about their debt crisis, and to be quite honest, I think just a lot of egos that are floating around at the moment. I really can't see them allowing the US to default. It would be really stupid. Unless half the politicians are short, then I suppose then they could push it. But nevertheless, let's have a look at the 3 hour. You can see a little bit of a gap up and gap down. That's a bit of a piercing pattern there. We do have not quite a crossover yet, but we're sort of below the 155. These levels are the key areas that we need to pay attention to. So it's 41.54. You can round it off to 41.50 and 41.17 to the downside, and you can also round that off to 4100. 4100 will be down here on one of these tails. 4108, 4105. That should be 4100. 4102. Anyway, you get the drift. Between 4150 and 4100, that's kind of where we are going to hover at the moment. So looking at the 3 hour, fairly strong move down. I haven't got a crossover yet. I've got a rollover of the oscillators. We're pointing up, which is indicating buyers are coming in. But then I've got some bearish patterns here. So take it with a pinch of salt. Right, into the hour, and this is kind of what we're looking for. So that engulfing pattern here, so we should rather say piercing pattern. So you can see when you gap up and then you close, you want to actually close halfway down the previous bar, and that sort of confirms the pattern. So this is a bearish setup, to be honest. Look at the oscillators, also a bit of diversions, moving averages, crossed over, pointing down. Looks like a bit of a flag. Where we're going, my view is you're looking for a short off structure higher up, and you can see why this sold off here, gap up and then sold off, because look to the left, there would have been a lot of entries here for short. So this is 41.44, 41.45, oscillators crossed over. My view here is you should be looking to see what's happening here. Keep it in the back of your mind that you have a daily pin bar. Okay, so there's not a solid pin bar, but nevertheless, there's quite a long tail on the daily. Still a red bar, very possible to be a pin bar. You drop down to 15 minutes, you can see no real change in the direction. We're still below the 155. You're still looking to be short. However, there is a bit of a bullish setup forming, and that is this head and shoulders. So there's your left shoulder, here's your head, and this would be your right shoulder. So you'd have to break above. I'm just going to, well, let's not readjust, let's just add. So that would be the neckline, which is 41.50. If you want to see a break and a retest, so I'd want to go through all these levels. So go through 41.54, come back to 41.50, and that would be my buying opportunity. The other side of this coin is a rejection of 41.44 or 41.50, and you're looking for a move back down to 41.17, 41.17 or 4100. That's kind of the view that I've got at the moment. Just bear in mind, this couldn't swing either way. It just depends what noise the politicians make today, if they make anything. And as I said yesterday, unfortunately, they've got until the end of the month to continue with their song and dance. So they really don't care about anything else except their own egos right now, and who's getting the most face time in the press and the noise and everything else. So just picture a bunch of peacocks running around. That's basically what it is. So I'm very cautious here on the US markets. And the last thing about the US indexes is the S&P, the Dow, and the Nasdaq have all got different setups. I mean, the Nasdaq's up 1.4% at the moment. So read into it whatever you want. So at the moment, I think you just need to be really cautious. Wait for the breakouts before jumping in. I'm a bit reluctant to chase shorts, to be honest. I don't believe that this is a short setup. This is more of a range setup, and we're in an area for a range. And then the other thing about that range setup is it could just be extended further down into the space here of 41.73 as well. So there's a lot of structure here, and this is an inside bar. So you start breaking above this. You start breaking above this inside bar here on the 8 hour. That's going to start setting up the next move to the upside. Oscillators are lining up nicely. Moving averages are in the correct direction. Your off structure, everything here is just bottom of range, bullish for another move up. So I'm very reluctant to jump in short at these levels. Rather looking to see if there's going to be a turn and looking for a reason to be long rather than for a reason to see a break below 4100. I doubt that's going to happen. But anything can happen, obviously. Depends what the politicians do, unfortunately. That's the moral of today and probably tomorrow's story and probably the rest of the month. Anyway, that's it for me. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.